So to help us set up the trading day, we welcome in Kevin Hincks, co-host of Fast Market, live from the CBOE this morning in Chicago. Very good morning to you, Kevin. Hope you had a really nice weekend. Okay, we've got futures pointing lower this morning. Perhaps a bit of tariff uncertainty now in the news. Maybe a bit of a legal battle on the horizon. Could be hitting a snag there as far as some of those duties are concerned. How should one be watching all of this as it now has been sort of raised as far as the appeals court is concerned and could be heading towards the Supreme Court?
Good morning, Sam. Yeah, a little more uncertainty going in, but if I'm trading these markets right now thinking about the tariff situation, and the ruling came out from an appeals court on, I believe it was Friday or during the day Friday, it's going to the Supreme Court. And remember, the tariffs are still in place while it moves through the courts to the Supreme Court. So all they did was make a ruling, a 7-4 vote, that they consider these tariffs to be illegal under the premise that President Trump put them in. But Sam, let's face it, as we know, this is going to go to the Supreme Court and they're going to be the final judgment. So I wouldn't overreact to the ruling here until the Supreme Court rules. And even if they do, even in the rare case that the Supreme Court would rule these tariffs illegal, they have a plan B, a plan C, and a plan D, Sam. So I personally as a trader would not get too surprised about these rulings. I would wait for the Supreme Court judgment.
Okay, it's a bit of a wait-and-see approach with regards to some of the legality of these tariffs. But in the meantime, India, a lot of sort of headlines over the weekend, particularly regarding that trade relationship. And then now Trump out yesterday with a Truth Social post talking about how they have actually offered to cut their tariffs to nothing, but it's too late, effectively. And he's been talking about how this is a one-sided disaster. How are you reading that, particularly as it's not the first time we've seen Trump's trade policies pushing countries closer together, like India and China, like we saw at the weekend?
Yeah, the visuals from the weekend meeting with China, Russia, and India are certainly something that caught the president's attention. Remember, the Trump administration believes in pressure. He's putting pressure on India. Why? Because India buys Russian crude. Keeping Russian crude supplies going, that's fueling the war in Ukraine. So the end product of Trump putting pressure on India is really to put pressure on Russia and the war on Ukraine. I think that's where that's going. It's that relationship that the Trump administration doesn't like. And if they're trying to end the war in Ukraine, remember, you can make the case, Sam, that two wars, right? The war in Gaza right now and the war in Ukraine right now are both being fueled by crude oil prices and Iran's ability to sell crude oil and Russia's ability to sell crude oil. If you affect that, you have a chance, President Trump has the chance to end those two wars based on crude oil's funding all those military operations. So I think this is a stepping stone to try to end these wars, Sam.
Yeah, and then we've just had these developments between Russia and China as well, that it looks like China is warming up to the idea of this gas pipeline too, which had hit a few snags in the past. So that's an interesting dynamic. And no doubt to your point, Kevin, I mean, the optics of those three men, you know, backslapping and handshaking at the weekend, probably not going down well in the White House today. But let's shift our focus to what's happening at home this week. It is data heavy. We've got the PMIs out later today. Obviously, we've got the jobs that's going to be a huge focus for the rest of the week. How are you looking at things? Let's start with some of the manufacturing data.
9:45 and 10 o'clock Eastern, we'll get PMI manufacturing and ISM manufacturing. Those are two numbers. Watch the ISM. That'll be the one that probably moves the market a little more. They're looking, remember, that number, the previous was 48, well below that 50 level. It's expected to tick up back near 49. They're looking for around 48.7. So watch those numbers. See if we get a creep near 50 for some expansion there. But this is a big week for economic data. In a four-day trading week, we're going to get all the labor market data that we look at, JOLTS, ADP, jobless claims, and then on Friday we'll get unemployment. Here's the original consensus numbers for unemployment on Friday, Sam. They're looking for 77,000 jobs, a 4.3% unemployment rate. That's up a tenth from last month. 0.3 on the wages data. Remember, that's a key inflation look, and 3.8% year over year on the wages data. That's down a tenth from last month. So those are the key numbers we'll be looking at, but that's not until Friday. We've got a lot to get through up until then, as you know.
Yeah, there's no doubt about it. Obviously, some earnings on the docket as well. But as you say, that jobs is so important because it is critical to what happens next as far as the Fed's calculus with regards to that September rate decision. Let's just talk about a few commodities. As I mentioned, on the move this morning, gold hitting a record high. Also, crude is ticking higher today off the back of perhaps some thinking around what we're likely to hear from OPEC this Sunday. So just to throw, another bit of event risk into the mix this week. How are you watching the commodities space, Kevin?
There's a lot of things, Sam, causing the markets to be a bit bumpy this morning. Not only are the futures lower, the foreign markets are lower, but you've got the dollar higher. But despite the dollar higher, you've got gold higher. That tells you that the gold move is risk off. You've got crude oil higher. You've got the 10-year yield ticking higher. And then, of course, since its lows a couple days ago, the VIX has gone from 14, now above 19 to start the day. So a big jump in volatility as well going into the start of today's trading. So all the metrics looking at risk off or concern about the markets, all ticking higher this morning, Sam.
Yeah, and obviously we know a typically tougher month for equities as well. Not a favourable month also for bonds. So we'll be watching as we kickstart this fresh trading month. Thank you so much for getting us across all of that this morning, Kevin. Appreciate your time.